Thank you for joining us. Welcome to Business Incorporated. I'm Chimezi Obi Iwago. On the show today, Tanzania blocks release of IMF's report which slates unpredictable policies in the country. Libya's infighting hurts economy at Tunisia's border town. Plus, Angola annuls winning tender for fourth telecom operating license. We'll get the show started with the markets, and most of the global markets have actually gone on holiday for the Easter celebration. However, markets here closed the week positive on Thursday. The NSE and the JSE index both closed positive for the Easter holidays, up 0.39% and 0.53%. Egypt closed for the week up 0.08%, and Kenya ended Thursday's session positive. In the Middle East, most markets closed for the weekend on Thursday, with Abu Dhabi's stock market reaching its highest level in more than 13 years. The index rose 1.05% to its highest since December 2005. Saudi Arabia's index was down 0.45%, with 10 of its 12 banks sliding. Qatar's index was up 0.39%, with Qatar Islamic Bank increasing 2.3% and Qatar Commercial Bank rising 2.4%. In Dubai, the index traded flat, with Commercial Bank of Dubai gaining 2.6% after its first quarter net profit jumped more than 21%. And in Europe, stocks closed higher on the final day of a shortened trading week as investors looked past weak Eurozone data to fresh corporate earnings. The Pan-European Stoxx 600 closed provisionally up almost 0.2%, with sectors and major bourses largely in positive territory. Equities initially turned negative after the release of weak manufacturing PMI numbers out of France and Germany. German manufacturing data came in below expectations, while France's data also showed decline in output. PMI data for the Eurozone came also in below forecast, stoking concerns of a slowdown in the region. The euro fell to a one-week low against the dollar after the figures were released, but investors soon turned their attention to corporate earnings, with results from consumer goods giant Unilever and energy management firm Schneider Electric beating expectations. In Asia, major markets there closed lower today, with Indonesia's benchmark index back in the overall trend as stocks jumped on election hopes. Meanwhile, investors looked to signs of progress in U.S.-China trade talks. In Japan, the Nikkei 225 slipped 0.84% to close at 22,090.12, with shares of conglomerate SoftBank Group declining 2.16%. The Topix index also fell 0.96% to finish at 1,614.97. Mainland Chinese shares declined by the close, with the Shanghai Composite slipping 0.4% to 3,250.20, and the Shenzhen Composite also declined 0.587%. The Hang Seng Index in Hong Kong also shared 0.49% as Hong Kong listed shares of China Construction Bank declined more than 1%. South Korea's Kospi declined 1.43% to close at 2,213.77. In Australia, the ASX 200 ended its trading week marginally higher at 6,259.80. And in the U.S., stocks closed higher on Thursday for the Good Friday holiday as Wall Street digested more corporate earnings reports, solid retail data, and two highly anticipated initial public offerings. The Dow Jones Industrial Average rose 110 points to 26,559.54 as shares of travelers advanced. The S&P 500 gained 0.2% to end the day at 2,905.03, led by industrials. The Nasdaq Composite closed just above the flat line at 7,998.06 points. Honeywell rose more than 3% on better than expected earnings, while United Rentals surged 8.2% on its quarterly numbers. Dow member Travelers Corporation gained 2.3% on its earnings report, while Snap-on jumped 6.5%. The earnings season is off to a good start. So far, more than 78% of the S&P 500 companies that have reported have topped analyst expectations. Our investors also got a boost after Pinterest and Zoom Video Communications had successful initial public offerings. Zoom skyrocketed 72.2%, while Pinterest shot up 28.4%. And away from the equities markets, Nigeria's Minister of Information says that the country's current policy of multiple exchange rates for its currency, the naira, is working well, and the central bank is unlikely to change it anytime soon. The country has maintained multiple exchange rates since currency controls were introduced in 2015 to counter the impact of falling prices for crude oil, which provides 90% of the country's foreign exchange earnings. The controls restricted access to US dollars and choked off investment. This is coming after the International Monetary Fund asked the country to scrap its multiple rates. And the International Monetary Fund has accused the Tanzanian government of refusing the authorization of a publication of its report, which says Tanzania's economy is being harmed by the government's unpredictable and interventionist policies. Tanzania's economy has been rocked by a series of policy decisions by the administration of President John Magufuli, a leader whose nickname is the bulldozer. During his tenure, the government has imprisoned representatives of mining and mobile phone companies involved in disputes with the state and demanded that gold producer Acacia Mining PLC pay a tax bill of $190 billion, equivalent to 2 centuries of revenue. The company, owned by Barrick Gold Corporation, is now in talks with the state to resolve the dispute. Other risks to East Africa's second biggest economy include delays or little progress in improving fiscal management and rushed public investments that may not have a high rate of return. In the report, the Washington-based lender sees economic expansion slowing to 5.2% in the fiscal year that ends on June 30, from an estimated 6.7% increase in fiscal 2018. Well, Angola's President João Lourenço has annulled the winning tender for the country's fourth telecoms operating license. President Lourenço has ordered for a rerun to ensure a clean and transparent progress. The move comes less than a week after an unknown Angolan company, Telstar Telecommunications, won the tender, first announced shortly after Lourenço's inauguration in 2017, and heralded that then as part of an opening up of one of Africa's most closed economies.